You've been watching decentralized finance for a while now. Seen some people make a fortune, others lose everything. You want to get involved now, but the complexity is insane. The risk, unbearable. Let's face it, you have no time to specialize in decentralized apps, and no money to lose either. Well, there is an easy way to earn returns from DeFi. A solution with no trading involved, no hassle. A place where you're always in control. Just deposit funds and watch your savings grow. We're talking about an app. We're talking about the Yield app. DeFi banking in your pocket.
Hello and welcome to another live episode of the Yield App AMA. I'm Akash and I'm joined by Yield App CEO Tim Frost, COO Justin Wright, and CMO Adrian Ginest. How's everyone doing today, guys?
Good.
Doing great.
Thank you. Thanks, Cash.
Fantastic.
Cash, I know you're kind of recent joiner to the team. I think maybe we need to give you a proper introduction as well. So some of you might kind of recognize Cash. He was helping to build one of our partner projects, Steady State, over the last year, and has really kind of built out a tremendous DeFi expertise, and has recently joined us as part of one of our DeFi portfolio managers. So it's been great to officially have you on board, and thanks for hosting tonight.
And thanks for having me here, Tim. Steady State's doing a great job over there, finalizing their code and the yield model over there. So very exciting stuff happening. But let's get started with this AMA. Now, first of all, we have some very exciting announcements over the past couple of weeks here at Yield App. Tim, could you perhaps update on what's been happening?
Yeah, absolutely. So we think, again, way overdue to do this AMA. But yeah, we've had some quite exciting developments especially over the last week. The iOS and Android is officially in our testing groups. We've had already just mountains of feedback to come in, and it really just kind of helps our development team and product team really identify these potential issues, and as we continue to build a better Yield app. By the way, I think there's always a question if you're interested in, if you're not part of the testing group, if you're interested in being part of it, you can email us at support@yield.app, and let us know if you want to be part of that testing. But we'd like to thank all of you that have already been testing us and help us to really refine the product. And I know people are testing on so many different devices and different ways, and it's can't thank you enough. Other big news I think came out last week and really kind of played on our vision on two fronts. One is to continue adding more and more value to the Diamond tier users, and more the vision of what we see as the digital assets be able to move value around for essentially for no cost. And so we've introduced 3 free withdrawals monthly for our Diamond tier users, and there's one of the first of many kind of updates that come on that front, but really want to harness that and allow people that if you want to withdraw your funds, you get 3 free withdrawals per month for our Diamond users.
That sounds like fantastic news for all of our users. Thank you, Tim, for sharing that information. And are we also able to discuss some changes to the BNB Smart Chain development plans?
Yes, BSC is it's one of the most highly requested, comments that comes across in our groups, and obviously, it plays into that vision, right, of being able to move those crypto assets around for virtually nothing, and so one thing that we've really seen trend over the last 6 months when we kind of initially were putting these ideas out there is there's been a lot of development kind of move away from BSC and to more kind of prominent chains. And that's why we really want to introduce the 3 free withdrawals right now. And obviously, as we continue to build and implement new chains, and we want to be able to offer these services, but more precisely the ones that are more implemented in the industry kind of out wide. So this overall, though, I think we're kind of you'll see BSC eventually be implemented, be able to put, deposit your BNB and your eventually your BUSD. But we're not really looking to support right now for various reasons, kind of BNB and kind of on a wider scale, because we particularly think there's better options on the market now for our client base.
Yeah, that all makes sense. But I'm sure the community will be encouraged to hear that the additional blockchains still remain on the cards. Particularly as there's been such a significant emphasis on multi-chain access to DeFi protocols and liquidity, and there's been this whole omni-chain layer zero hype for the past couple of months, which really kicked off, and expecting it to have more legs down the line in the future. But yeah, there's also been some exciting news about developments around the referral competition. Adrian, could you perhaps talk to our users on how that's going to work out?
Sure thing. Thank you, Akash. So first of all, the referral is doing just as planned. It's picking up pretty well over the past few days, past few weeks. We got close to 2,000 people who signed up through the referrals. People are starting to deposit money, starting to get the condition requested to get their rewards unlocked. So everything is working pretty well. That said, we want to continue pushing that. The market is a bit so at the moment. We see a lot of people who are disconnecting a bit, and we don't want that. We want to continue our growth. We are continuing our growth, and we want to push that even more. So what we are launching in May is a competition for the referral program, where we will actually give prizes to the best referrers out there. So let's see who it is. I think there will be 3 main prizes. We will tell you what it is very soon. Stay connected to our social medias to get the information. We will communicate about that. And then probably up to 15 people overall will get a prize, smaller prizes. So how that will work, basically you need to be at the end of every single month one of the people with the most active referred users out there. What it means is the people you refer need to have at least a silver tier on the Yield app and $1,000 value of assets invested with us. I want to remind something though to everybody is that I got a lot of comments, and maybe we should have communicated better, but that's what I'm doing right now. We got a lot of comments saying, "Hey, $1,000 is a lot of money to invest to actually get the reward. Like, why did you choose that?" Well, I just want to remind everybody that $1,000 you can deposit them not in one shot. If you want, you can deposit $100 this month, $200 next month, and then $700 in 3 months, and you will still be able to unlock the reward. So what we want is to have a referral program where users build their portfolio over time and still have the chance to get rewarded for that. We are not closed to anybody, and the goal is really to get valuable users for the long run, for the long time, and that's what we will continue to see over the next few weeks and months. We are also discussing with the tech team the possibility to integrate a leaderboard for the referral program into the app. Let's see if we can get that up or not. But if it's the case, the competition will become much more interesting. And knowing our community members, I expect a lot of action, especially considering the very good prices who will get set up for everybody.
That sounds really exciting. I think I'm personally looking forward to see how many I can get. But best of luck to everyone. It's a pretty entertaining kind of competition that you can play with amongst your friends as well. But more importantly, Adrian, now I saw photos of you guys. The Yield App team attended the Bitcoin 2020 conference in Miami, as well as the Paris Blockchain Week. I think a lot of people around the world are pretty jealous that there was such big events happening around the world, and we're pretty glad that these events are finally on after the last couple of years of COVID. Do you want to have a chat about tell us about what happened at these events and any plans for the rest of the year if you want to attend any more of these?
Sure, it's very good feeling to be back in the real world, actually. Meeting everybody in the industry, meeting some of our customers out there, having very good chats with them. So the 2 events we did the past months, Miami, Paris, very successful. I will start with Paris. It was a very huge success. It was mostly an industrial event, an event for the industry, sorry. There was very few retail there. And it was very nice to meet Ledger, to meet different teams director of Binance. Had very good chats with them. Still having some chats with them. Met a lot of people regarding all types of potential partnerships in the metaverse. Some people offering real estate metaverse ETF. Very cool things. You can really in those events catch up what will be the next topic in the coming years, and I think that's exactly what we're doing and planning our long-term roadmap during these events. We've distributed over 400 or 500 T-shirts in both Miami and Paris. That's as many people walking around with the Yield App logo on their back now and doing so very proudly. So no, very good. I think the same in Miami, with the only difference that in Miami was a lot of retail. Very good occasion to meet potential new customers, explain what we are doing, even if we are not serving the US markets. 20% of the US population are immigrants. So it's actually very useful. A lot of French people, English people from all over the world, So it's very good one more time to take the temperature and really understand where the industry is going, where we want to place ourselves, and make sure we are placed better than others. So very good. Next month we will continue just that. We will be in Belgrade in a few days, and we will be in Roma blockchain conference at the end of May, and we're planning many more. If you're a Diamond Tiers, you will probably receive some invites to the side events we are holding there. It's always a pleasure to meet everybody. One more time, we met some of our users in Paris, in Miami. We were very pleased to do so. Finally, meet them face to face, and yeah, I would say it's really a key part of our strategy over the next year, at least. That's for sure.
And thanks, Adrian. And Tim and Justin, were you guys going to attend those events as well?
Tim?
We have a number of events that we're going to be at. I think over the next year. I mean, like as Adrian said, I mean it's been so good to get out there, and you're going to see. I mean, the Yield App team at every major event kind of moving forward. And that's kind of what our goal is. Obviously, we want to have a presence. We have such a fantastic community, and we had so many people come up to us in Miami and in Paris and introduce themselves. We've had private events that we had a lot of our members at, and we look forward to a lot of major events in the future. But I think you're going to see a lot of the Yield App team kind of rotating at a lot of the events moving forward.
Fantastic. I think we're all, as Adrian mentioned as well, it's really glad that we're all finally back in the real world and traveling around without these closed borders. So fingers crossed, nothing changes in anytime soon. Justin, look, apologies, I haven't been able to involve you yet. And I know there's a strong vocal supporter group who's always happy to have you on these AMAs. Now, it's been a bit of a time since the community heard about the progress on the regulatory front. Is there an overview you could give us, or some updates you're going to share with the community?
Yeah, I think I guess probably more from a macro standpoint. It's been very well publicized, the changes that are coming, just across the world. And we talked about this a lot last year in terms of how this regulatory environment is shaping up. And I think, if anything, we saw that acceleration at the end of last year. The first quarter of this year has been no different. I think probably some of the biggest things here, the executive order from the Biden administration. We've had some new guidance put out by Fiat. In particular, the situation in Europe and Ukraine, which with the sanctions and the sanctions reporting, and I don't think any financial services company has been able to escape from that, and rightly so. But it's about making sure you have your data, you're on top of this, you're compliant with the system, and making sure you have that dialogue, obviously, with your regulators in each of the markets where you are. But ultimately, there's really two parts to it. There's always going to be a camp of people that are resistant to enhanced reporting or oversight of the business. But at the same time, and I think Adrian touched on it at the Paris blockchain event, there's this huge B2B community that's attending these events. We when we set up this business originally, were always mindful of the convergence of traditional finance and digital asset type finance, and now under this wealth management banner. So, there's part of the trade-off in terms of some of these increased responsibilities ultimately is a wider adoption of the business and legitimization of the industry as a whole. So I think net the outcomes are positive. I think some of the things to be mindful of going forward are through the sanctions reporting and acceleration of adoption of the travel rule in the different markets, but really just a continuation of what we saw, as I said, latter part of last year and first part of this year. I think in terms of our own progress, we have been working now for about 6 months on building out a fully regulated asset management business. I think, as probably our customers and users know, we've also placed an emphasis in the second half, last quarter of last year, towards developing our high net worth institutional part of our business, now corporate customers, and really this fits into that. So it's a combination of things, but by building out this new part of the business, and hopefully we'll have some announcements on this in the coming weeks or the coming month or so, it does a few things. It provides confidence back to the market in terms of how we operate and the governance and controls we put around our business, both from in the way that we manage assets and manage our own balance sheet, but ultimately also it provides us another platform in terms of being able to continue to expand our product. And I think, as the industry continues to grow, as we see more and more interest in digital assets as a investment class, not necessarily just DeFi, ultimately that ability to develop product and put product to market that's either fit for purpose or valuable to our customers and expand the offerings we have, I think is always something that's very welcomed by the community in particular. So I guess that's about it for now, just on that stuff. And as I said, we'll have some more updates coming through soon.
Yeah, it's everyone's got their own approach to it. Every different country, every different region. A bit of an off-the-cuff question for you, Justin. Now, noting that there's no real playbook in the on how we regulate things or how we're going to regulate the Wild West of DeFi. If you were in charge, what would you do? Like, how would you what kind of parties would you talk to? What kind of approach would you take in starting to legitimize and regulate this space?
Well, I think that kind of journey's already begun. I think we're quite a way through that. So, in particular, if you look at the definition of VASTs or DASTs and how that's been expanded to incorporate, anything from software developers who touch a piece of code in the DeFi protocol to jurisdictional operation, enhanced KYC, AML. One of the big things we've seen with some of the changes in the US is a lot of people offshoring or separating out their US customer bases from their customers that are non-US based, and in particular places like the Bahamas. There's just been a big conference there, Bermuda and so on. So I don't think there's going to be, it's not a case of a sudden change now. I think we've already seen it happening. And again, this comes back into, building credibility around the business. I think from a regulatory perspective, it's quite a hard thing to do because, you have rules, frameworks, and legislation that's been in place for many, many centuries or many, many years now in different markets based around the product sets that exist in market historically. And of course, by adapting it and manufacturing them in this way, and the mere fact that they're decentralized as well, then it's a hard thing to try and please all the different parties. So, we are a member of Global Digital Finance. It's one of the biggest global advocacy groups. I co-chair one of the panels there. We've had Malcolm Wright join our advisory board, who is the co-chairman of GDF as a whole. He was previously the head of compliance at an exchange in Hong Kong, a number of other firms. So I think it's being mindful of what's happening, having a voice in terms of trying to shape these policies with the different working groups, but ultimately it's trying to find that balance between, protecting your customers, but maintaining an ability to be able to put your product to market within the confines of how those things sit today. One of the things I think people always talk about in fintech is friction points. there will always be, again, a pushback on. We had a pushback, or people have always tried to push back on, particularly KYC AML checks, which was one of the first things, and of course the next iteration of that in terms of these the travel rule is another area where companies are going to be mindful of how do you take these responsibilities forward, and how do you actually put them to market in a way that as I said, it's how do you actually take them to market in a way that it works, and it works for the customers as well. And I think one of the issues with the travel rule is the fact that there's a number of different solutions and providers out there. There's no standardization. Different countries are introducing it at different times, and it's a case of how do you be part of that and make sure you do things the right way.
Yeah, I mean, the big question would be how do you, like as you said, how do you regulate without interfering with the entire premise of DeFi? So we'll see how that goes. It's going to be a challenge that the entire world's going to face hopefully very soon, so we can get it over and done with and start moving in the right direction altogether. Before we do move on to some live questions, Tim, there was some information that you perhaps wanted to share about Fiat rails.
Yeah, I actually saw this come up in some of our groups, so we might as well go ahead and address this. But the Fiat rails, we have a number of accounts opened, and obviously we're in that product rollout phase right now. The iOS and Android is being tested right now with a number of other features, but kind of our dev team has started on that implementation now as well. So, after you see the full release of the Android and iOS apps, I think soon afterwards, I think you can expect to have some very good Fiat rails coming in, and obviously we've taken a long look at the demographics of our user base, predominantly in Europe and in Asia, and so we're really trying to build Fiat rails that make sense to where you live and where you are.
Fantastic. Now, unless there's something else either of you guys want to add on, we can move on to the live questions. No? Okay, so the first one we have is from Michael Morley. Now he's asking what will happen when the tier bonus rewards on base assets run out. And it'd be good to get some clarification on that. My understanding is there's been a few questions around this previously as well.
Yeah, absolutely. We always need to keep make sure we're clarifying this. But the original pool of 45 million YLD actually has been exhausted. That was kind of originally dedicated for tier rewards, and we recently put in an additional 30 million YLD to the pool. It's really helped us kind of grow and reward the early adopters of the Yield App platform. I believe that was a little over 17 million left in that, and at that current rate of the current market price of YLD with the current AUM, that would expect to last about another 4 months before it'd be exhausted. Obviously, that can lengthen or shorten depending on the financial variables. But essentially, once that's exhausted, that pool will be exhausted. But however, I think what we've really been building behind the scenes and why, I guess what we spend, pretty much the majority of our time on is continue to drive market leading yield back to our clients. So on Bitcoin, Ether, stables, and that's our main objective is and what our user base, from what we've known to see, is they really truly care about is having the top yields in the market, really with a conservative approach that we do, that something they know it's going to be here for the long term.
That all makes sense. I think sustainability is essential in DeFi and CeFi. We've seen many companies fail at the hurdle, and essentially they just disappear or go bankrupt. So especially in this new kind of industry where, as we spoke about earlier, it's not fully regulated yet. So people can just the sustainability is perhaps not a key thing on their palette when they start out. But yeah, there's also been a few more questions about a card program and the benefits that prospective program may have. Now, Adrian and Tim, or maybe Justin, anyone want to have a start a discussion about that, or any current thoughts about it, or what the progress is?
Sorry, Tim, I was going to jump in with a comment because I think, talking about Fiat rails, talking about the card programs and all these product sets that we want out there, I think and having had this conversation about regulation, I think outside of the actual product itself, it's really important to also understand that in the environment we're in terms of the multi-jurisdictional approach, in terms of the fact that a lot of these providers are licensed financial institutions and service providers, there's an incredible amount of documentation, compliance, due diligence, and conditions that have to be met and processes to go through to effectively have the authorization to build these programs out. And fortunately, because of the way that we operate from day one, the governance we have and how we manage the business, we're a long way through that process. So, and before Tim jumps in with some progress reports, as I said, I think it's just important to understand that there's one aspect to it up front as you go into trying to create these product sets. And of course, outside of any sort of coding capabilities internally as a business and through our dev team, you then also need the governance and operational processes and controls around it. So these are not 2-month end-to-end projects. They're considerably lengthy in terms of a process just from start to finish in terms of being able to take that to market. That was just a point to raise there. So, Tim, over.
And Just, I think you completely nailed it right there. there's the link that you as a company has to go through in order to launch a very successful card program. I was fortunate to be part of the original founding team at Wirex, which just passed over 5 million users worldwide. And what Wirex was originally, and still the core of their business is it's a crypto card company, and that's really what's going to make it special. But it's basically an order of priorities. What we want to set as a company, right? We have a world-class development team, but I think the one thing our clients want above and beyond everything else is they want high yields, and those come through all the systems and the wallet infrastructure and the DeFi infrastructure we're building on a daily basis. And so the majority of our kind of really top talent is really focused on just that, right? Just continue to build out value on that side, as long as with the other strategies we run. And so, we've made decisions that this is the kind of the top priority. We do plan on launching a card program in 2023. And also the industry has really matured a lot, and we've seen some other players really launch some recent cards just kind of in the recent term, and others kind of have things planned right now. But overall, if we had to pick one, it's going to be to continue offering you market leading rates is what our number one goal as a firm.
Thanks, Tim, and thanks, Justin, for the insightful overview of how difficult it is to kind of get the card program off the ground, and how important the regulation part is again. We have a question from QBA, and he's asking that, are you planning some aggressive advertising to build the bigger community? Adrian, you might be the best person to take that one on.
Sure, I can do that. Thank you. First of all, I would say that yes, of course, we are going to continue launching aggressive marketing, especially when the mobile app is out. It will allow us to do much more than what we're currently doing. So marketing will come 100%, way more aggressively than it is at the moment. That said, the question is especially about the community itself. So first of all, it's interesting, I would say, to see that our community is still growing while the space has never been so quiet on social media in a long time. And I would say I don't want to advertise to build the community. I don't think you build a community by advertising. I think community is built through care and genuine interest from the team. And I think we are doing that just great. We are seeing language communities growing at an incredible pace at the moment, in French, in Polish, in Chinese. It's really impressive to see. And who is growing the community in fine? It's the community itself. And we are seeing small group of customers, of users who are helping grow the community every single day. every single day, new users coming in, thanks to them. And I think, as I said, you don't build that through advertisements. You build that through care, through regular updates, and through genuine interest. And I think here our RM, regional managers team, our community team are doing a great job. And they will continue to do so. We are continuously hiring on those positions because care is 100% one of our main focus here.
Yeah, and just just to follow up on that again, and this comes back to the customer support teams. While some of these things aren't always as visible in terms of a presence in market, there are continual changes and evolution in the terms of how we do this, and we've been complemented quite often in terms of the quality of our customer support infrastructure that we have behind the scenes. That's continuing to grow out. It's continuing to become more as 24 hourly based as we possibly can in the different languages and different parts of the world, and really just being receptive to users, customers, requirements and demands through the various different ways in which you can reach us as well. And we think that's really important. So yes, whether it's the relationship managers with some of the corporate customers, whether it's the customer support and care teams, I think ultimately it's about being there, being available, and being able to answer and help the community as they need.
And Adrian, just a follow-up to what you were discussing earlier, will your community building strategies differ in like a bear market or a bull market, or will they stay pretty much the same regardless, strengthen a strong and aggressive management of that?
I would say when you have a fair vision for the mid to long term, either you are in a bear market or in a bull market, if you convey this vision correctly to the community, explain why you are doing what you are doing, and make sure everybody understands and aligns on those plans, then the community continues growing. And I would even say community in bear markets is exactly the time when you see what your community is actually worth. We've seen some projects who lost 90% of their communities in bear markets. As far as I see, we were still growing. Our community members are supporting each other, and there is daily interaction, daily talks. So it's very great to see. I don't think bear market has an impact as per se on the community, and if it has one, it's making it stronger at the moment. So I'm pretty happy with that, honestly.
Yeah, on that, I think our message has really resonated well with the industry, and as Adrian kind of mentioned, over the last 4 months, we've seen the industry contract a little bit, and it is measurable. Yet, our community continues to grow and thrive. The amount of total assets that are on the platform continue to grow as even more competitors actually start to emerge, and I think I think people really do understand. I think beyond the market speculation, our message is pretty loud and clear. We do believe that people should all hold digital assets in your portfolio, and if you're going to be holding digital assets, you should be earning yield on it, much as you wouldn't leave your bank sitting in the bank account. If you're going to be holding Bitcoin, Ether, or stable coins, you got to have it be able to continue to earn. And otherwise, inflation is going to continue to outpace you. But we're continue to, as Adrian mentioned, build it. Everything is about the community, and we have an amazing community, and we're grateful for it on a daily basis. And we just want to find out more ways we can continue to give back to you guys, and obviously that full transparency that you guys want and demand is something that we always want to achieve.
Thanks, Tim, Adrian, and Justin. I think that's a pretty satisfactory answer to that question about the community building. And bear market's always a great time to build, always a great time to network and learn new skills, such as use different chains, learn Solidity. So bear market's usually a great opportunity for anyone who probably wants to get involved in the space, because there's always way too much noise in a bull market. Moving on, there's a question by Tarek Sama. Why is the YLD on YLD APY rate lower than the APY rate on stables? Doesn't this incentivize users to sell YLD and put downward pressure on the price? Is that something you want to talk to us about, Tim?
we're not going to really address any sort of price speculation, but I think that we've continue to see the amount of total AUM or total YLD on the platform has continued to increase. I mean, you can follow us when we do our updates regularly, but I think we have more people coming in, and most people the amount of locked YLD continues to grow day after day, and staked YLD as well. There's a lot that's kind of gone into the different rates, and obviously as we continue to build this out, but we think we'll have a very thriving ecosystem as we have, and then continue to have kind of moving forward.
That would make sense. There's a question by Steve Phillips on any news regarding new coins to be added onto the YLD platform to earn on. Adrian or Tim, any either of you guys want to take this one?
We're going to be slow to kind of add more assets into the near future. Particularly we do a lot of due diligence before adding any assets. Particularly, we want to make sure we're only adding assets that we're very confident will be here for the next decade to come. Is a very strong ecosystem. So we are working on a few, but we'd rather just kind of surprise people when we're kind of rolling these out ultimately.
And just to touch on that, actually, we got some very interesting feedback in Paris, for example, from institutional players, family offices, and everything. And they were like, guys, you don't implement a lot of new assets on a regular basis. Why? And we explain why. Yeah, because we have such a due diligence process, such a drastic one. It takes a lot of time, and actually, few of them only are going through. And the answer was no. I mean, it was not a critics. Like, we actually appreciate that you focus on the most reliant one, the strongest one, and it's a proof of quality. It's a proof of seriousness from your side. So please continue doing so. Don't rush into buzz. Don't rush into big names on your app that maybe will not be around in 5 to 6 years. We want to see assets that are here for a lasting time. So I think we have the right approach here, and our drastic due diligence process, even if it can be frustrating from time to time because we don't add that many assets, that's true, is truly beneficial in the long term for everybody, for every single of our customers, and for us as well.
I just think it's also, I think it's really important to point out some of the nuances and mechanics behind this as well. Ultimately, we are effectively managing some very large portfolios, and coming back to those primary objectives in terms of being able to offer the market leading APYs, being able to do it safely, securely, and maintain our risk management practices around this. There will always be demand from different regions, whether it's a currency based version of a coin, so whether Australian dollars or euro coins or other particularly popular tokens that are out there. But ultimately, it also becomes a function of scale and being able to maintain the safeguards that we put in place, have that capital preservation process that really underpins everything we do, and whether or not there is the opportunity there to generate the types of returns that we look for and offer back to the market. And I think it's important just to understand the dynamics of these as well, because and Cash has touched on it just now, as markets change, whether that's a bear market, whether it's a volatile market, a sideways market, it could be very tempting for people to either change or chase yields and change their own risk processes to keep generating customers or generating returns. But ultimately, when you're looking for longevity and your principles of that safety and stability, then we have to be very mindful of that as well. And that's another whole part of that due diligence process if it's not explained out there as well. But we have to be able to manage those assets accordingly.
Fantastic. Thanks, guys. I think that covers it pretty well. There's a question about from Alex Montoya asking for a general roadmap for 2022, seeking a bit of to give the community a bit of insight on what we're going to focus on for the rest of the year. Adrian and Tim, do you want to perhaps have a bit of discussion? I know we touched on a lot of things earlier on the show as well, but maybe a bit of a roundup would be helpful.
you want me to go, Adrian?
I can go first. It's okay. So first of all, I have another question to answer that question. How many companies out there do publish a roadmap and actually respect it? Because that's the thing. Having a roadmap, a beautiful roadmap with colored steps on the website and everything, it's another thing to actually get all those milestones done and completed. We tried that, and I speak like I know what I'm speaking about. It's complicated. Not lying at that. Not lying there. So we've made a choice so far to focus on actually doing things, not promising any dates, and I think it's been working pretty well. That said, I'm pretty sure a team will be happy to give a direction for 2022.
Yeah, absolutely. I mean, I think everyone's seen the kind of obvious, right? More assets. We got the mobile apps, the Fiat rails, right? And it's really the core fundamental of what we're building and offering here. And all the trading systems, the DeFi innovation happening behind the scenes, right? And that's, if we really kind of weigh the development, right? I mean, it would be very heavily skewed towards those things that are behind the scenes that are generating those passive yields that you guys are enjoying. But in particular, I mean, on the product side, I mean, we are working on a few things with our CIO on kind of a few products coming. But we're those are still a ways off. But obviously, these come highly requested from the community, right? They want kind of more products and features, from financial products. I don't know, Justin, if there's anything we can touch on at this point.
I don't think anything specifically. As I said, I think, and to mirror some of Adrian's comments, obviously you have a roadmap internally as a company because of our own processes and objectives. We have to meet the KPIs, the OKRs, and just management of our teams. Software development, regardless of the industry you're in, is a particularly hard one to pin down in terms of deadlines, because of the nature of the business, how quickly it evolves and changes, and not just the underlying infrastructure of the business, also the opportunities, the regulatory oversight. It really is about managing our resources accordingly. And even a part of that is, how do we grow and continue to add top talent? I think most people would be aware there's a careers page up there. And these things aren't as simple as hiring 10 developers and plug and play. These things follow a process. People have to be trained, they have to understand our business. But it's about continuing to build for the longer term. So in terms of specific products, no, I can't really say anything. I think it's probably better that as we go through the next couple of months and these things are formed up, then we'll let the market know, I think.
Absolutely. Fair enough, Justin.
Fantastic. Look, I think we've nearly been going on for 45 minutes here. We might just take one more question about the Coinly integration and the progress behind that, and then wrap up after that. Adrian?
Yeah, so Coinly and their alternatives, by the way, alternative solutions, they have been pretty busy with huge amounts of new projects in the space who actually want to integrate with such solutions. The process is taking some time. That said, we are in talks with them. It will be integrated. We will facilitate all that process. No worries. It will probably be there for the next declaration time. So all good on that side. We're actually working on it as we speak.
It's fantastic news. All right, guys, we might just wrap it up there for today. Thanks, Tim, Adrian, and Justin for joining us, and thanks for all of our viewers as well. You will also be able to find the details of today's announcements and the weekly Yield App Essentials newsletter, which all of you will have received yesterday. Keep an eye on social media as well, all the channels and Discord for all further updates. We'll catch you guys soon. Bye for now.
Thank you. Thanks, Akash.
Thanks, Akash.